Good day everyone watching. Welcome back to my channel, the Irregular FX, where we analyze beyond the charts. So on my previous video we went through the models that we trade here at IrregularFx. We went through the patterns, the reversal patterns and the continuation patterns. So someone on the comment section asked me to walk them through on how to identify these patterns, so I listened. So on this video we'll be going through on how to identify these patterns. So without any waste of time, let's get to the charts. Okay guys, so like I said, we have two reversals and two continuation. We have a bullish reversal and a bearish reversal. Then we have a bullish continuation and a bearish continuation. So let's start with the bullish continuation, okay, and the bullish and the bearish continuation. So let's start with the continuation patterns. Okay, so obviously guys, like I said, the market moves inward in three phases: an impulse, a correction, and another impulse. So it's phase 1, phase 2 and phase 3. Okay, so phase 1 is what is the first impulse, phase 2 is what is the second impulse, right? So here's our bullish continuation and here's our bearish continuation. So obviously guys, the market when it's going impulsively, what will it be doing? It will keep on pushing. Okay, for a bullish trend, it will keep on pushing to the upside, okay, with the force to the upside, breaking all the highs that it had created before. Okay, so when it keeps on breaking that high, those highs, I mean, that means the market is what is still impulsive. So obviously that means the market is still impulsive when it keeps on breaking the highs. Okay, keeps on breaking what the highs, the market is still impulsive. But the moment the market creates a high, okay, creates a high, then pushes back to what, to get some momentum, consolidating, then it pushes back up, but does what, it will fail to break the previous high. So the moment it fails to break the previous high, which is what, this high, then it pushes back to the downside. Okay, it will push back to the downside. Then if it breaks the previous low that it had created, that's where you know that okay, now the market is what, the market is now forming a continuation pattern. Okay, so if it creates a high, then comes back to create a low, then fails to break the previous high that it had created, that's where you know that now the market is what, is forming a continuation pattern. So when the market does this, what do? You go to your what, to your trend lines. Okay, you go to your trend lines. Okay, let me delete this. So okay, you go to your trend lines, then you cater for what? You cater for your two recent highs. Okay, your two recent highs like this. Let me show you a demonstration like this. So here's my first high, then here is my second high. Then I construct my trend lines, then I do the same for the supporting trend line. So here's my first touch, my second touch, then I do what, I wait for what, for a third touch. A third touch needs to be around where? The third touch needs to be around here. Okay, the third touch needs to be around here. So when the market comes and gives me a third touch, that's where I take my entry. But here's the trick guys, what I've realized, what I've noticed about the market, whenever it gets to the third touch, it tends to break outside the trend line, giving what, a false signal. So there are those that trend breakouts. Okay, so when the market breaks out of the trend line, they go for sales. So here at IrregularFX at FALCON, we know that the market tends to give false signals. So when it breaks out of the trend line, we wait for it to come back inside the trend line. When it comes back inside the trend line, that's where we take our entries, right here. Okay, this is where we take our entries, then write the rest of the next impulse. Okay, all the way. Okay, so we aim for what? For our target, obviously we aim for what we call a 90%. So a 90% is somewhere around here. Okay, so yes guys, this is how we spot our continuation pattern, our bullish continuation pattern. The market will be moving upward impulsively, then when it starts to correct, forming a high, then comes back up, forming another high that needs to fail to break the previous high, then pushes back to the downside. Then that's where you see that okay, now the market is correcting. Then you go to your trend line, you construct your first high, then I meant my trend line, then you connect it to your first high, your second high, then you go to your supporting trend line, you construct it to your first low, then your second low, then you do what? You wait for a third touch here. So when the market comes, when it drops and gets to this point, when it reverses and pushes up, this is where you take your entry. This is where you take your entry. Then you aim for what? You aim for a 90%, which is somewhere around here. Okay, then you aim for 90%, then catch the rest of the move. Okay, so yes guys, this is how you identify your bullish continuation pattern. Okay, also known as the bullish flag. I will show you on the real chart. This is just a demonstration. Okay, then for the bullish reversal, it's just what? An inverse of the for the bearish reverse, my bad, for the bearish continuation, it's just an inverse of the bullish continuation. Okay, so the same thing but in an opposite way. So obviously the market will be pushing to the downside impulsively. Okay, breaking all the lows that it will be creating along the way. So it will be pushing to the downside impulsively, creating a low, then breaking the low again. It's still going impulsively, then creating another low, then doing breaking the low again, still going impulsively, creating another low. Then the minute it creates, it will create a high, right? It will create a high. Then the minute it creates another low, failing to break the previous low, now we have what? We have a lower low. We have a lower low, right? We have a lower low. Then the minute it forms a higher low or a lower high, the minute it forms a lower high, which will be the low that will fail to break the previous low, that's where we see that the market is now forming a continuation flag. Okay, then what do we do at this moment? Go to our trend line, we join the first low to the second low. Okay, then we go to our resisting trend line, connect it to our first high, then our second high, which is the higher high, right? Like this. Okay, so when it does this, what do? We wait for a third touch. The market should always give you a third touch. So wait for a third touch where somewhere around here. So on that third touch, we wait for the market to break above that the trend line that we drew. Then the minute it comes back inside the trend line, that's where we take our entry, right? That's where we take our entry. But this video is not based on the entry points. I will make another video based strictly on the entry points. My bad. Yes, I'll make another video based strictly on the entry points, okay, on how to minimize going into losses after taking a trade. Okay, so yes guys, so okay, on this one you enter where right after it comes back inside the trend line, somewhere around here. Okay, so this is how you spot a bearish reversal. Okay, so obviously the market will be pushing to the downside, then creating a low, then going back up to create what? To create a high, then it will push back to the downside, creating what? Creating a low, but the low needs to fail to break what? The previous low. Then if it fails to break the previous low, then you see the market pushing up. That's where you go to your trend line, then you do what? You construct your first low to the second low, you connect it to your lower low, then you connect it to your higher low, okay, or lower high. Then for a resisting trend line, obviously you will have your first touch somewhere around here, then your second touch, then you do what? You wait for a third touch. Okay, you wait for a third touch. Then on the third touch, the market needs to break above the resisting trend line. Then the minute it comes back inside the trend line, that's where you take your entry, then you catch the rest of the impulse to the downside. Okay, but to be safe, aim for 90%. Okay, so 90% is where it's somewhere around here. Okay, so yes guys, this is our two continuation models. Okay, this is our two continuation models, the bullish continuation and the bearish continuation. So like I said, this was just a demonstration. Now let's go to the chart and try to identify these patterns. Okay, okay guys, so we are now on the chart. I wanna show you how to identify these patterns on real charts. So we're on the euro against dollar chart. So firstly, I want us to identify the bullish continuation pattern, okay, also known as the bullish flag. So without any waste of time, let's do it guys. So we're on the daily time frame. Okay, so these patterns guys, you can find them on a daily time frame, on a 1 hour, on a 4 hour, on a 15 minute, on a 5 minute, on a 30 minute. You can find them everywhere. You just have to know how to apply them. And another thing, they are mostly efficient on a higher time frame. Okay, you are most likely to increase your probability if you analyze on a higher time frame, especially, okay, let me say the 4 hour and the 1 hour. Okay, if you are a day trader, mostly the 1 hour and the 4 hour. Okay, so here it is guys, the bullish continuation. Let's say from here. Okay, let's say from here, from here. Okay, let me try to zoom in a bit. Try to zoom in. So yes, okay, so on this one, guys, what happened was we were on an impulsive move. Okay, impulsive move to the upside. We were on a bullish impulsive move. As you can see, we created this high, we came back, we broke this high, we went all the way to create this high, we came back, we broke this high. Then from here, guys, we created this high, right? Then came back to create this low. We went back to create another high. But notice something, guys, this high does not break the previous high, which is this one. Okay, as you can see, it does not break the previous high. Then we went back to create a low and came back to create a high, which also failed to break the previous high. Then we came back again to create a low, went back to create what, a high, which also failed to break what, the previous high. So what did I say on the demonstration? I said if we create a high, we come back to create a low, then try to push back up and create a high, but failing to break the previous high. Then the minute we push to the downside and break the previous high, that's where we know that okay, now we are on a continuation pattern. What do? We go to our trend lines, then we cater for what, for our two highest points. In this case, we can use this one and this one. Then we construct them. After constructing them, we draw the supporting trend line. Okay, we draw the supporting trend line. So here's our first low, then our second low is this one. Then at this point, what do? We wait for what? We wait for the market to give us what, a dead touch. Okay, wait for the market to give us a dead touch. So for this one, our dead touch was around here. Okay, our dead touch was around here. So this is where we take what, we take our entry after what, after the dead touch. So our entry was somewhere around here. If you were a what you call a swing trader, those who like to trade on a larger time frame, like the daily and the weekly, this was where your entry would have been. Okay, then another continuation pattern. Okay, from here we went all the way to create this high. Okay, then we came back to create a low, went back to create a high, which failed to break the previous high also. Then the minute we push to the downside, we already know that okay, now we're forming what, we're forming a continuation pattern. Then you go to your trend line, you construct your two current highs, which are these ones, which is this and this. Then you go to your supporting trend line, you construct your two lowest points, which is this and this. So as you can see, this one looks I won't say it's efficient enough. So if it looks like this, you can also copy your first trend line. Okay, you clone it. Let me show how you do it. You click on your trend line, then you right click. Yes, you click on your trend line, then you right click. Oh my god, what the heck. Yes, you right click, then clone. Okay, then after cloning, you can just attach it to your to the point between your two upper points. Okay, your two highs. So this is the point in between the two highs. Then you wait for your third touch. But remember what I said on the third touch, usually the market tends to break the third touch before giving you the entry. So after we break the third touch, what you do, you need to wait for the market to come back inside your trend lines, okay, inside your channel, because we call this also a channel, okay, or inside your flag. So the minute it closes inside your flag, that's where you take your entry. So in this case, you can take your entry right here, okay, you can take your entry there. Okay, so let's try to identify another continuation on this daily time frame. Let's try to identify another continuation. Okay, here it is. Here it is. So from this continuation, we went all the way to create what? To create this high. Then we came back to create a low. Then went back to create a high which is equal to the previous high, so it does not mean anything. Then we came back to create what? A low. Then went back to create what? To create a high which failed to break the previous high, okay. So that's where we know that, okay, now we are correcting to continue, okay. So then we went back to create a low again, then went back to create another high which failed to break the previous low. Then, okay, at this point you have a right to draw your trend lines, okay. So we start from the highest point, then the second highest point, which is this one. Okay, no, for this case I think it's this one. Okay, yes, this one. Okay, then after that you go to your supporting trend line. So here is your lowest point, then okay, I don't like this structure, it's too complicated. Let's abort it, let's leave it, okay, let's leave it. It's for the advanced Falcon traders. Only them can capitalize on a structure like this, okay. Let's look for a clear one. Let's look for another clear one, okay. Okay, seems like there are no more clear bullish continuation structures. Okay, let's dive into the 4 hour. Okay, let's dive into the 4 hour, because I see patterns that just need to be zoomed out on the 4 hour. So here we are on the 4 hour. So here's another continuation pattern. Okay, let's start from here. So here was our impulse, okay. So we went all the way to this high, and we came back to create this low, then went back to create a high. But notice what the high failed to do, what? To break the previous high. So the minute we push back to the downside, that's where we knew that, okay, now we're having a continuation pattern. Okay, so we go to our trend line, we construct the two highs, which is the first high and the second lower high or higher low. Okay, so after constructing them, we go to our trend line again, we construct the what do we call this, the supporting trend line. Okay, so here was our first low, then our second low was over here, then we do what? We wait for the third touch. Okay, we wait for the third touch. So there's something that I've noticed as I've been drawing these, identifying these continuation patterns. So it's a bit tricky when you draw the supporting trend line. So for it to be easy, what you can do is instead of drawing it, constructing the 2 points, you can just copy the trend line, clone it like this, then you attach it to the point between the two highs, which is the higher high and the lower high between these 2 points. Okay, attach it to these 2 points. Attach it to these 2 points if you struggle to draw the supporting trend line. Okay, so that you can have your third touch. So obviously after attaching it, you wait for what? You wait for your third touch. Then on your third touch, as soon as the market comes back inside the trend line, that's where you take your entry. So for here, our entry was gonna be around, okay, so obviously we have to wait for it to break the trend line. So it broke the trend line, so when it comes back, the entry was gonna be around here. Okay, the entry was gonna be around here. So obviously you catch the rest of the move. So yes guys, I hope you picked up something on how to identify the continuation patterns. Okay, I hope you picked up, like I said, I hope you picked up on how to identify these continuation patterns. So now let's go to the bearish continuation patterns. Okay, I wanna make this video as short as possible. Let's go and try to identify the bearish continuation patterns. For the bearish continuation, we're on the DXY. Okay, we're on the DXY. So okay, obviously we start from the high, then we go all the way down. So from here, we had our first impulse. Then we had our first correction. Okay, we had our first correction, created a high, came back to create a low, which failed to break the previous low. Okay, then that's where we know that okay, now we're forming a continuation pattern. Then we go to our trend line. We start with the supporting trend line. Okay, in this case it's the resisting trend line. Then we construct our 2 points. So we can use this point because you can see if we use this point, it will break this candlestick. So we have to use this point as our low. Okay, then we have our first low, lower low, then our higher low. Then for the supporting trend line, or for our supporting trend line, we have our first high, then our second high. So for this one, we only had a 2-touch move, then we were gone. So on Falcon, guys, we don't only have 3-touch moves, we also have 2-touch moves. There are incidents where the market only gives us 2 touches before taking the actual move. So for you to capitalize on those such moves, when the market gets to the second touch, okay, you don't enter immediately. You wait for it to break on the third touch, where on your resisting trend line. So when it breaks on the third touch on your resisting trend line, that's where you take your entry. Okay, you take your entry somewhere around here. Okay, yes guys. Okay, so let's try to identify another one. So on this one, we had our impulse, then had our correction, created a high, came back to create a low, which failed to break the previous low. Then as we're moving back up, that's where we know that okay, now we're forming a continuation pattern. Then we go to our trend line, our first touch, our second touch, then we go to our supporting trend line. So we had our first touch here, then our second touch, then wait for the third touch. So as you can see, here's our first touch, our second touch, then on the third touch the market did what? It broke above the trend line, but that was expected since we know that the market tends to break on the third surge before coming back. It likes to wash out orders. Okay, so after the market broke above the trend line, we waited for it to come back. So when it came back, we took our entry somewhere around here. Okay, took our entry somewhere around here. Okay, then obviously our stop loss needs to be placed above where the market turned. Okay, so our stop loss needs to be somewhere around here. So obviously after taking the entry, we went to a bit of profit, then went back up to a drawdown before eventually pushing to the downside and ending up hitting the 90% rule. Okay, so yes guys, this is it. This is our bearish continuation. Let's see if we can identify more continuation. Let me see if we can identify more clear continuations. Okay, here's another one. So obviously we're pushing to the downside impulsively, then we started to correct. We went back to create a high, then we came back to create a low which failed to break the two previous lows, okay, or the previous low. Then as we were pushing back up, that's where we saw that okay, now we're forming what a continuation pattern. Then went to our trend line, construct the two lows. Okay, we construct the two lows. Then after constructing the two lows, okay, let's just copy this one to save time. Let's just clone this one. Okay, let's just clone this one and then attach it to the point between the two lows. Okay, then wait for a third surge. So let me adjust it. So that we can have our touches. So yes, this was our first surge, our second surge. Then on the third surge, what did the market do? It broke above our trend line, then it came back in. As soon as the market closed inside our trend line, that's when we took our entry right here. Then we aimed for a 90% of their move. Okay, so yes guys, this is our two patterns, continuation pattern, and a bullish continuation and a bearish continuation. So the logic of these patterns, guys, is for a bullish continuation, you just have to look for a structure that will be falling in this manner. Okay, then